Okay, I had this hedge from last night and it basically didn't do anything, so I just left it going. And finally, news came out, momentum kicked in, and price started going bullish like I was hoping. And the short side of was still green, so I took it because I believe the day is going to be bullish. You don't have to be in a hedge if you think one direction is more guaranteed than the other. There's no guarantee, but I closed those short positions on the MES side of my hedge because the price just kept wanting to go up. So we were copy pasting 3 accounts with one position in a hedge, and in another 2 accounts we did a different trade with a different hedge with different position sizes. So we had 2 hedges going on. One had 2 accounts, one had 3 accounts. Closed both sides of the short. Now we're only long on the positions. So I'm hoping everything does what I think it's going to do, and that is be bullish for the day. Doesn't guarantee anything. Also, I'm going to try to add to this position for the first time in my life if things work out. You got to get that experience someday. And one final note: I'm not sure if I'm going to be hedging with my real money, because when I'm in a hedge with 1-to-1, 1 micro long on the MNQ, 1 micro short on the MES, they sometimes this side will be down $200. It's crazy. And this side over here will be flat, like at zero. And that's the divergence that can take place. Eventually this side catches up, and eventually this side slows down and goes sideways. But there are major swings and divergences. And in real money, if I was copy pasting 3 accounts down 300, that's $600. Bye bye. No guarantee that the market's not going to keep going. No guarantee how it's going to the positive side is going to catch up or mitigate that. Eventually, there will be some mitigation, but it could be disastrous with a real money account. Not experiencing that and having it happen to you for the first time, and going, "Wow, I didn't see that coming." I do see the potential of that coming. There's definitely potential for massive losses with hedging. Just with any trading, you got to be careful with the risk. I can't stress that enough. So I don't know. I'm just doing this hedging for a little while longer. We'll see how it goes. But I have other strategies that I like to trade: scalping, momentum, and moving average and trend line strategies, Fibonacci strategies, all kinds of different strategies that I love to trade. And we'll be getting into some more of that as well. So I'll let you know how this turns out today. But I also want to throw that out there about long-term hedging and the risk that's involved in all this. Plus, Apex doesn't allow you to hedge, or they call it spread trading, whatever. All right, I'll let you know what happens here. Here's a perfect example. My original entry was right here for the MES short. Look, it's only gone this little distance. My original entry right here, which I'm still in, for the long side, look at this huge divergence, how fast that's gone up, and look how little it's gone up over here on the left side. So that can happen. I would be $150 down, because this is basically, actually this is negative, because this would even be negative as well. This wouldn't be helping. Not only would it not be helping, it would be in the red because it's above my entry price and a short. So this would be red. Now I'm just saying, if I was short over here and it went against me, this would be no help to the other side. That can happen. That is something that can happen in these hedges, and happens a lot. That's why using only 1 or 2 micros, if you're going to do it in your real money accounts, like I might, or Top Step allows it. Everybody allows it, but Apex, okay? Ninja Trader, Charles Schwab, TradeStation, everywhere that I've talked to allows it, except Apex. Anyway, I want to point out the divergence that can happen here, and how you can possibly not get any help from the hedge side. Well, I have a mind made up that I'm going to hold this to break even. And if it comes all the way down and gets me out, I'll be a little bit profitable anyway on both sides. Completely close the hedge and reassess the situation. I'm hoping that it's not going to come all the way back down, because I had about $700 if you copy paste all that together. And I would have given all that back. So what I was hoping for is, I've never done it, just to let the day play out and see if I can do that. And I have another option of just, getting back in the hedge, putting on a short side again, if that's the case. But, this right here would be, this side over here would be green. I sold it. I got out of it when it was green. I got in here, got out there somewhere for a little green. But it was red up here, and now it's green again. But I could always put the hedge back on if I think this is going to keep going down and take all my profits and turn a green day red. Nobody wants to turn a green day red. And that would really bite. So this is still a bullish bias in my opinion. And I guess I'll get out of the trade at break even if it comes all the way down. A lot of times it comes back down to these levels right here for a pickup. And my stop is right in that area. See price come back down to these levels a lot of times. So it's going to cut it close. We'll see what happens. Okay, maybe this was a bad idea, but I decided to get into the hedge again because this is moving so slowly and almost reliably slowly that I think I can get a hedge here that if it drops, I'll take profits. If it comes up, I'll add to it. There's some safety in that, it seems. Less risk of adding to it because it doesn't look like it's going to break out as much. And then if this does drop, I will have profits that I'm locking in with this hedge over here. And even if I lose money on the hedge now, it shouldn't lose as much as this is going up over here. So having the hedge makes sense right now. And I put it back on both of them. So I'm actually even heavier on the hedge, 3 with 2 short, long, 3 short, 2 long. And down here we are 2 short, 1 long. So I'm heavier on that side because it's not moving very fast. And it's just an emergency. So since it's not moving very fast, that could work in my favor if the market keeps going up and I'm making money on the right side, that this is not going to lose as much. So that makes sense. Now, if everything drops and crashes, I'm going to be okay locking in profit. So I think that's a smart thing to do. Because I'm not as fully convinced as I was earlier that the day's just going to be some kind of gigantic bull run, since nothing else is going but the NASDAQ. So that's something to take into account. And see right now that the market is coming down to close to break even, coming down a little more and more. Came down here further, came down here further, just to that area where this is a good buying area. That's why I don't really want to have my stop there. And my stop should be down here. Because if it keeps going down past that, then surely it's going to keep going probably. But the breakout pattern is a lot of times where it'll come back down to. And this was green. This was green about $50 before it spiked up. They both were green real good there. I was going to show that, but I got sidetracked. So yes, even if it comes down, we're locking in profits. And that's the whole point of the hedge, really. And I think in the future, it would be wise to put on a hedge after you're already green. I think that even my real money accounts, like if I put on a trade and it's green and I'm green, I want to try to hold it longer and I got several $100s in there, and in that particular trade, I could throw on the hedge and see how that works out. That's a way that I might do the hedge with my real money accounts, come to think of it. But you have to be in a trade long enough to hold it that long. And with my real money, I'm basically quick scalping. I don't want to lose a penny, you know what I mean? So I don't know if I'll ever get a chance to hold a trade long enough. Maybe so once profits grows more and more. But I'll let you know how this video finishes. Okay, I mean, how many times have we had our stop loss in the area that I said it was going to come back down to? I thought it was going to come back down to an area to buy, bounced real strong and hard. And I don't know if it's going to keep going down or not. It might continue down. But even if I was waiting right there in that area for a bounce, the risk reward was fabulous. So what I did instead of getting out at break even was I added to the short side. I think I already put that in the video. So we're still short. So we're locking in profits. Everything is green still, all 5 accounts. Of course, it was a little higher. But these two are turning green as these lose their green. So that's balancing out pretty nicely. And we still have yet to close everything out. Now I got more information in the day and feel a little bit different kind of emotion. I got these shorts now that are worth this much, 105 and 57. And I'm green on the long side as well. How about that? That's amazing. So what I'm going to do is I'm going to go ahead and close out two of these. Sell, or one of these even. Buy.
Order filled.
Okay, yeah, I'm going to close out one of those right there. And I'm still green. I'm still holding two against two on that side. And I'm just going to take I'm going to lock in the profits from this right here. And on this one right here, I could do the same thing, but I'm not going to. I'm not going to. I could take profits off on both sides and just stay exposed to the long side only. That's all options. Those are all options. But what I did do is I added a long here. So I was long one, now I'm long two. And I cut out 3 shorts on this side. I reduced. So that's 2 adjustments, 2 tiny adjustments that I'm making that if price goes up, that will benefit me. So I like that. And look at this out of nowhere crash. Look at this thing. Goodness gracious. Come crashing way down here. I wasn't paying attention and I don't have my alarms on right now. This was great profit on this. I should have took out another one down. If it comes back, rolls back down, I'm going to take off another one and hope that I can sell it if it comes back up. That's what I think's the best idea here. Stay in the trade, stay in the hedge, but try to scalp profits and spikes. Okay, it was time to flatten everything. Nice. Thank God for today. It could have been better, man. These were up over 200 each. I mean, it was one of those days where I wanted to let it play out and see what the maximum could be. And, you know, you never know what it's going to do. So it could have been even higher. But anyway, we'll see you on the next video, incorporating all styles, many styles, learning how to get better, managing risk, and continuous practice. Have a good day.